Hey traders, Raghee here. Welcome to our Thursday episode of Charts and Coffee. Good to see everybody. Audio and video should be good to go. All right, great to see everyone. Yeah, I lost the countdown. So I found the culprit for our video issue, and it was that countdown thing that I used to run. So anyway, welcome to Charts and Coffee. Happy Thursday. Good to see everybody. All right, so let's get to it. If this is your first episode of the Charts and Coffee show, just to get your questions in, whether you're on Facebook, whether you're on YouTube, I can see them on our platform here. Let's go right down the list, first come, first serve. And so let's get to it. All right, yes, it should be a fun day. I'm with you, Trisha. I think it should be a really fun day. It should be interesting. Post-Powell, post-Apple, post-Tesla. Absolutely. And then we have the melee of the retail, Wall Street bets army and the short squeezes. Oh, gosh, what an exciting time to be a trader. You know, I shared a scan with traders on, this is kind of a funny little story. So some of you that are I know we did it in the Sector Secrets Mastery and in the Futures Room. I reverse engineered the AMC run. I thought, okay, it was three really simple criteria. What was the criteria that kind of preceded the AMC run? And we came up with three names in the scan. AMC, which had already made the move. So I really wasn't interested in it. I wanted that pre-Reddit run-up. CLVS, that had already kind of started to move. So this was Monday. Remember, this was Monday. So it's the 25th. I'm not too crazy about that. I already made the move. And the last one of the three names with this little Reddit scan that I created was Cox. So I thought, all right, why not? Right? That was Monday. I will tell you, in 34 years of trading, I've never been in anything like this. I mean, I've traded Bitcoin and I've traded during the Greenspan years of surprise rate cuts where you're trading midday and all of a sudden there's a crazy rally in the market because there's a surprise 25 bip cut. I've been through all that. And okay, 1 second. I forgot my coffee. I forgot my coffee for Charts and Coffee. Yeah, it's out in the other room. So, it's pretty hilarious. I got the rolling eye emoji. So, yeah, so this is the first time I've ever seen anything like that. And again, it's really interesting. You sent me the rolling eye emoji. I even told them. Rolling eye emoji. All right. Salud. All right. So kind of interesting what's happening. Yeah, really exciting times. So let's take a look at what's going on in the broader markets. Yesterday's sell-off. Question here. Yesterday's sell-off. Hey there, Em. This is where we're looking for that minor lower inside day. Now, yes, yesterday would be an interesting day to start looking at the calls, but I would only do so with a very small position, meaning that if you are looking for that long position into the wave on a pullback, the Dow is probably a little trickier, S&P and NAS, maybe a little bit easier. I'd say NAS and Russell easier still in terms of where the validity for the trend is in regard to the pullback. But, you know, today's little inside day, which looks like what we're getting on the NAS, should be a good opportunity to take a look at, I would say a pretty small position to look long. I'm not looking short, gang. I'm not looking short. We did a deep dive yesterday. I'll show you a little bit. Why am I not bearish? This is why, right? People can yak on and on about macros and fundamentals, but there's only 4 pillars of macro that matter: growth, inflation, money supply, and monetary policy. And this is part of monetary policy, gang. You know, you take a look at the M2 money supply, you take a look at the total assets on the balance sheet. As long as that continues to move higher, we are good. We are good. I have a very difficult time not wanting to engage the long side. So great question. They're still double green, and Russell's still way out ahead of the pack in that regard. So thank you. Yeah, so let's shift gears. Wheat and corn. So 2 of the swing trades that I've been talking pretty incessantly about, beyond the dollar short in terms of Canadian dollar, British pound, euro, New Zealand dollar, and Australian dollar. One of the other swings that I've been talking about has been the corn and soybean market. So yeah, I've been continuing to look for those pullbacks. 21 EMA in corn and 34 EMA wave for soybeans. And this is just a good old-fashioned, as far as I'm concerned, it's a good old-fashioned swing trade. That's it. When I mean by swing, identify the trend, engage the pullback. Really nice move here. In fact, day before yesterday, if you're on the Simpler Trading YouTube channel, check out a video that I cut. It's a free video, and I discussed margin requirements, expectations for moves, and what kind of profit you can expect from a corn or soybean entry, not to mention the ETFs that give you non-futures traders a shot at playing this particular reflation trade in grains, CORN and SOYB. So check out that video. It's a free video. You don't have to sign up for anything. I walked through these two markets. So good stuff. Thank you. Really good stuff. All right, moving on. Great to see everybody. My thoughts on the currencies. Sure. Again, Rolex, I absolutely want to continue to engage the 6A, the 6N. This is New Zealand dollar. This is Australian dollar. Yeah, I'm still interested in looking to them to the long side. The one that we are managing probably closest to maybe proximity to an entry would be Canadian dollar. I love the direction of crude oil, and I love trading the Canadian dollar with it. So actually last night's free video was a deep dive into energy. And if I've got a bullish play on energy, think of the offshoots, because in that video I discussed the offshoots as well. And we're rocking some Colombia Supremo today. Really tasty. I just ground that one up. It's really good. So think about sort of the related markets, because that's really a lot of what I do. We can move seamlessly from futures to currencies, to energies, to oil stocks, to the indices, to the ETFs. And when you discover that connective thread, the entire marketplace is your playground. And that's what we want. I don't want to be limited to just looking at options on a handful of stocks. Crude oil is a market we're bullish in. And then so I start looking at oil explorers. I start looking at oil services. I start looking at the energy sector. And then in that video, I even started getting into, well, what does Phillips 66 and Marathon Petroleum look like? So these are all going to be connective, that thread, right? So 6C, to answer your question, right? That 6C is definitely where I have most of my attention on. I know it doesn't look very promising, but be patient. Be patient. We haven't gotten our next round of swings, but I like 6C because I like Canadian dollar, and British pound has been really strong as well. So anytime you've got Powell, or as I like to call him, Powell, you've got to reel in your stops to trailing or even exit in front of an FOMC event if you're trading those currency futures or those currency ETFs or the Forex, of course. So good stuff. Thank you very much. All right. So did they shut down Wall Street Bets? Really? Oh, yeah. Somebody told me. Yeah, I won't put your. I share your sentiment, my friend who put the thing about the Wall Street Bets. I thought they were down for a little bit, but I didn't think they were totally off. I know Discord gave them the boot. No, I see them up right now on Reddit. I heard they were down for about an hour, and then I see they're back, I believe. So check it out. I'm looking at the board, unless it's a cash. I could be wrong, but very interesting story going on with that Wall Street Bets. All right. So can we look at MDT? Sure. Medtronic and a lot of the XLV healthcare ETF stocks have been on my radar, and we definitely want to look at opportunities there. I put XLV on the watch list last week, but I haven't fired off any trades because it did not take me long in the last week to realize that the pullbacks that we're seeing and some of the volatility that we're seeing just might be that tendency seasonally for the markets to have that mid to late January pullback. And once I started seeing a number of my trades start to take on some water, not in healthcare because we didn't fire anything off yet, but and when I started to see my other trades take on water, that's when you have to step back and say, wait a minute, what else is coming and where do I need to be a little bit more prudent? Normally, if we're going to start a position in a time of uncertainty, I usually recommend the tide, not the individual boat, right? And if you're not familiar with that whole tide and boat analogy that I use and how to do that, check out my Countdown Trader newsletter where I talk about a lot of these tactics. I talk about what I like to do in front of Powell. I talk about the indicators that I use. It's a free newsletter, all right? Countdowntrader.com. And a lot of the questions that I see in the chat stream, and thank you so much for the questions. These are very much, a lot of these are going to be addressed in that Countdown Trader. There's an issue or two out every single week. So yeah, do check that out. So when you're in an environment like this and it's getting a little rocky, rather than betting on a single boat, unless it's a very, very strong outperformer within that sector, go with the tide. In other words, go at the ETF level. Heck, go at this at the index level. All right. Freeport-McMoRan. So I love Freeport-McMoRan, but my entry zone ran smack dab into proximity to earnings. What does that mean? That means that I want to be long, but right into earnings is not the time that I will get long in front of. Now, I don't mind in a situation like Freeport-McMoRan because it's easy to control risk. It's not an expensive option. Therefore, my risk is very different buying a single-digit option versus a double or triple-digit option, right? When you think about negative impact as a percentage of your account. You know, the math behind risk and position sizing. So I don't have a problem with this, especially where it landed really nicely at a volume level. And I don't really care to see volume in terms of time. In other words, that more traditional histogram that a lot of folks will use. I really could care less about a volume histogram. In other words, if there was a lot of volume yesterday, well, great. That's only a small fraction of the picture. Where was the volume? Where has been the volume? So I study volume using VWAPs, volume profile, because that allows us to measure volume at a price level. Very, very different in terms of the way in which, when this lands here, look how much more information I have knowing volume at a price level as opposed to what do I want to get here? I want to get to, so if I'm looking at Freeport-McMoRan, what I actually want to compare it to is copper. That's what I want to compare this particular market to. So what I would tell you is when you're looking at Freeport-McMoRan, keep an eye on copper futures. Copper futures pull back, Freeport-McMoRan is likely to pull back. I'd like to see a nice volume level on copper as well. But I've been playing copper to the long side for many, many months. And this is not going to shake me loose from that bullish directional bias. So thanks for the question. LRCX, sure. All right, so looking at the Lam research. Again, earnings is the issue. So this is a good example, though, of something we talked about just the other day in the Charts and Coffee show, which is if you have proximity to earnings, right? Let me get my handy dandy drawing tool out here. If you have proximity to earnings, think a little bit more about not the week of or even the day of or the day before. Think about, so this is our earnings date right in here. Think 2 weeks out. Think 4 weeks out. Think, well, clearly I'm not on the chronology, but where I would start thinking about if there's anything I want to do with Lam research is really right around here. That's where I'm starting to put this thing on my radar. This is where the trade starts to look interesting to me, right? Because if it's double green, 6 weeks out, 4 weeks out, that's the trade. That to me is the trade, or even in here for the run, right, into the rally into earnings, not on that date. Does that make sense? That's what I want to, really want everyone to be a little bit more proactive, a little bit more way further out preparation for these earnings setups. All right, so moving on. I'll grab another question. Let's see. XLF. Okay, so XLF, again, boat versus tide. I like the XLF, and I continue to like it. It's been on the radar. I actually like also some of the individual stocks. So now, if you're looking at XLF for the first time today, what I would recommend is you start looking at some of the individual names within that ETF. And that means you're looking at who might be relative outperformers. What does that mean? Who's trading in a way that's still maintaining the uptrend? Who's trading in a way where they're performing better, stronger, right, than XLF itself? So you can get a little bit more granular down to the individual stock level. Again, I'd rather stick with the ETF level if possible, so I can bet on many, many boats. But in the XLF with earnings in a rearview mirror, now I can start to look at some of the individual names and say, okay, you've got earnings in the rearview mirror. How did you survive earnings? In the case of American Express, yeah, not so good. In the case of a Goldman Sachs, far, far better. Remember, though, when the tide goes out on the broader indices at the YM or ES level, it is then going to affect this level, right? And then, you're going to look at the individual stock. And so, there is a little bit of a judgment call there where if XLF is wobbly, but something like Goldman Sachs is holding its wave pretty well in relation to XLF, that's where sometimes I'll have to make a judgment call to say, XLF is viable. I sure don't want to short it, but I might want to wait for a little bit of a pattern to show that we're going to see a pause and then reversal, or I should say a pause and a continuation of the trend that was. Right? That makes sense. No harm in waiting for an extra candle, gang, especially after a big move or a gap down. But in the case of Goldman, earnings survived it, maintained the green and maintained support in the wave. Just one blue grab candle. Still trading above the 34 EMA on the high. So those are things that I will keep in mind. All right. All right, moving on. Showtime, you said you went to high school with the Koss family. Yeah, a very close friend of mine had a sponsorship deal. They had some custom headphones made, and she had a custom headphone line with Koss. So yeah, lots of connections to Koss. It tickled me when I actually texted her. I said, "You'll never believe the stock I bought." It was kind of funny. All right, so hang on. Moving on to Apple. All right, hang on. Yeah, I wanted to grab some questions on some of these stocks that just had earnings. So Apple, dang, the thing with Apple is I don't have propulsion dots to work with here. And I don't have a retracement, right? Not a reversal, but a retracement down to levels that I can do anything with yet. So I love the narrative, but this is again where if you can play the game well in front of earnings and then get flat, that's what I'm looking for. Can I look back, from earnings a month and a half, even as minimal as about 2 weeks, right? And find an opportunity to play a pullback, right? And then be flat before earnings. I don't want to play through earnings. That's never the game that I play. I want to play to, and then now I'll start looking at post. All right, what happened to the trend after earnings? Is the trend still intact? Do I still like the double green? Do I still like the XLK in the situation for Apple? That's where it's heavily weighted at the ETF level. And then I'll look at the individual. Now remember, Apple's unique in terms of its weighting across the broader indices. So cool question. Thank you. What about Peloton? Yeah, Peloton. Our very own Mr. Henry Gamble in the Simpler Options Room slayed this thing last year. I mean, he was really on it. And that's one of the reasons it got my attention. Thinking, I got to take a look at some Peloton. I'll tell you what, before work from home, before lockdown, however you want to look at it, I mean, Peloton was not heading in a good direction. Talk about being the right company product, being the right product at the right time. But as a general rule, I got to wait for the double green. A pullback like this, again, my issue is the proximity to earnings. I've got to be really careful because how much time? So the issue I have now is time. It's not trend. It's time. Do I have enough time for this thing to move higher? So again, keep that 642 week in mind. All right. Okay. How are we on time? Oh, I'm almost out of it. So I'm going to be heading over to my day job here in just a moment. Take a look at the first couple hours and see if we can put some day trades on. And in the meanwhile, everyone head on over to your respective rooms. I'll see you all at some point, probably in the options, futures, or sector secrets mastery room later on. In the meanwhile, if you don't belong to any of those, no worries. Check out the free newsletter at countdowntrader.com, and you can see a lot of the thinking behind the setups that I discuss here in Charts and Coffee. Thanks always for your time. We'll be back here tomorrow morning at 9 a.m. I'll see you then. Be good to each other, gang.